Okay, so my last video, I kind of got a little carried away and jumped into an alter thought process. At this point, 16 minutes in, apparently, I started coming unwrapped. So somebody claimed I was incomprehensible. Well, what I was just calling out was the trade plan. If you had a gun to your head and somebody said, every 4 hours there's a trade, what's it going to be? Okay, this gun to your head trading. Like, you have to make money today. How are you going to do it? Okay, we have a doji on the 4 hour. There's a trade plan for that. There's a completely obvious trade plan for that. It's a hedge, right? If it's going to be a directional trade, and I'm not talking about trend, I'm just saying, what is the next 4 hours going to give us? Okay, you have 4 hours, your sample. Can you trade based on the last 4 hours? Yeah, I could, because if I'm going to run a 4 hour chart and on the right I got the 1 hour chart, I can see a top become a bottom, or I see a double bottom on the 1 hour. I'll just take the risk. Now, beneath there, I'm going to, since I only trade one currency pair, beneath there I'm going to have some big psycho case scenario. What if it plunges down? Okay, I'll grab that too. What if they stop me out? Oh well, I lost today. So, but are you doing, I don't mind losing if I know that it's a logical loss. And I don't mind non-directional trading if I don't have a choice. Like, the market's not giving you this choice of beautiful. I mean, I could cherry pick this chart. And I could say all sorts of things about MACD. I mean, I could go on and on. There is the reversal I pointed out earlier that jumps out at me. And if he stretched this fucking MACD out a little bit, you could see that this is more overbought at a lower price. In other words, the histogram is drifting up. And it's the only thing that's sensitive on this whole thing. And that's another problem, is I'm a sensitive person. So for me, I would use a sensitive indicator. This double top, this divergence here, I'm like, okay, let's start thinking about selling this thing. We're not making it back to the scalper's exit. If I was forced to trade this currency pair, which I wouldn't bother. It's just disastrous from a scalping standpoint, the Australian dollar. And look at this thing fall out of bed on a Sunday. If you had your pendings for weekly, they would have held over the weekend. You could have got in on this. What people don't understand is you could have placed buy limits here after the market was here and walked away. You could have put monthly orders in here and walked away. This is 4 hour chart. So I'm going to try to clean up what I said here. So I'm going to start at 16 minutes where I do really I'm so pissed off. Kind of all day long. So I'm not in denial. I just repress it. I try to crack jokes. Right? I'm with Bill Burr. We got to thin the herd, okay? And we got to take this no nonsense guy as part of the thinning of the herd. Okay, I'm going to talk over myself now. See if I can clear this up. It is incomprehensible. Okay, so I'm starting at 16. I'm starting at 58. So what I'm trying to say here is that I want to see what the market really is without any kind of sunglasses. Like, the indicators are like putting on sunglasses and everything looks better. Yeah, there's no glare, but the markets are glaringly rugged. And if you can trade bar by bar on the 1 hour, 4 hour, if you have a trade plan for a doji as opposed to a big screaming bar up or down, because after that, I mean, most breakout traders are not coming in after a big bar. They're going to wait for it to go sideways. Then they can get in on a trend continuation. Up hard, doji, go long, go short. Doesn't matter. You're going to put your trades on in the doji or at the end of a big bar. Market goes smashing down, goes sideways. Where are we structurally? Are we trapped beneath? Are we accumulating underneath a baby auction? So there's many auctions in here, and there's many times where the price pops, retracts. I mean, who hasn't figured out these wicks are what's stopping people out? Well, why aren't you buying them? Why aren't you entering there? Well, because we don't have any confirmation. So this confirmation trading is just for pussies, straight out. You just got to be fucking sissy all day long. I mean, just trade it. Christ. You got an account, put a fucking, just try getting in when the risk is low. Yeah, if it's screaming in one direction, sure. Now you got to think about swing trading that. If you want to accumulate a position as it's pounding down, So here's me becoming incomprehensible. I love to see the true picture. It's awkward. So I'm just going to, if you had a doji bot, you could blow this guy out of the fucking water. Like, here's a 4-hour doji. I don't know if this is Sunday night, though, so it's hard to say, but these are hard. This is gravestone shit here. Now, even when I say gravestone shit, I mean, if you don't understand the candlesticks, there's a dragonfly, a gravestone. There's an abandoned baby, which you wouldn't see many on here. In the stock market, you would. It's a gap, little baby little baby cross, or a cross, or a, I don't know, you could call it whatever you want. But there's a bunch of, I studied, dude, I own 3 giant coffee table books by Steve Neeson that I thought, well, I gotta memorize 3 marching soldiers, or I can't I mean, I'm very, like, dedicated, like, I want to learn the whole thing, or I'm not going to do it at all. I'm not going to just halfway participate. So, dude, I read there was not one fucking trade plan in there. So I said, well, okay, I got 3 marching soldiers, but after 3 marching soldiers, should I go long? Well, didn't I just miss the fucking soldier march? Like, I'm looking at that trade going, well, that's fucked. Well, apparently the only place to get in on the candlestick is when the market goes sideways. So maybe I'm saying a doji bot, or you could be the doji bot, which would be, in essence, the ultimate doji bot is a non-directional trader, but he has to scale out. Every time I talk about trading, I'm assuming that we're getting into a scalp, we're getting into an intermediate, we're getting into a swing. Because how are you going to make any money? You could trade against your swing. You could get into in other words, when Mark Douglas says on one of his tapes that people going in and out of the market with effortlessness of, yeah, I'm on my tablet hitting the number, right? I have a casual feel about trading. I don't feel like, I can't wait for them to smash it into my limits. Or I can't wait for that to go sideways and load up and just be like, I think. And if I can guess the direction, I would. Otherwise, I have a tight stop and I'm just going to stop out. And then I have limits deep below. So I can have 8-hour limits and I can trade on the 15-minute chart, knowing that if they ever punish this currency and just treat it like, the domestic violence kind of treatment, that, I can make money from that spike. Because I've got enough money in the account that if they smash it down there, I'm like, oh, that's just fucking, I'm half filled on this ticket. I mean, I'm half filled on the bank of tickets. And then when I see it's down there and I go, holy shit, it's pausing. I'm going to get in at the market on a doji with a tight stop. If it goes down hard, I get in with a wide stop. I'm only doing what the market's telling to me to do every 4 hours that goes by. Every 4 hours, there's a trade. There's also a pending to be placed. I mean, you don't have to trade every 4 hours, but technically speaking, at the end of 4 hours, based on the wick to wick range and the body, okay, there's plenty of info there to put a trade on. You don't need to go back on the chart. You should be able to trade one trade from what has just happened. Forget moving averages, forget the trend. There's literally, it's just yelling at you. Candlesticks are yelling at you. Each candlestick is so unique and so but I'm just going to say that small bodies are dojis, regardless of the wick. In other words, at the beginning of the session, the end of the session, market hasn't gone anywhere. I know it's wicked, but there's a trade to get in now because you're at the delta. You're at the apex of a triangle. You're in a flag, right? You've gone up, you've gone down, but at the end of the day, you're fucking almost where you started. So that means a failed auction, or that just means everybody agrees. Maybe this is the agreement price, and everybody's very stable there, and people live there, and everything's great until the market gets tipped into a window and other markets get tipped into windows, and you'll just see it cascade. You'll just see these holes fill, and then it's over. It just comes rushing in. Like when you build a dam and it gets a little overloaded, bam. You can't hold if you think the markets are natural phenomena, you can't hold the price back. Nobody's going to hold the price back. I don't care if it's the bank. If you say the big banks are moving it, okay, well they're just filling the tickets that are. This whole myth about the retail traders 98% losing the way the banks need it, whatever, dude, it's obviously feeding on something, and we can see it's feeding on the hole. I mean, the void, the lack of price. It's pounding into it. At some point, it's going to become satisfied and say, you know what, this is fucking boring. So before I start with myself there, when the market, now that I'm a little calmer, this whole plunge here, granted, if you're just going to lay limits in here and you're buying heavily here, in other words, every time it does this shit, you're buying at the market and you're putting in limits. You're like, oh yeah, seen this trade before. And you accumulate and maybe you do scalp out a little bit. Here's some dojis here. And the non-directional traders are scalping. And when I say these moves, I mean, we're talking about trades that you're running a really tight stop here, right? Every time you see these, there's a gravestone or a dragon. Like here is an inverted hammer that is so tiny. I don't know if you can see that. Look at these cute little dojis, and all of a sudden, guess what? This whole range gets destroyed. So any breakout trader worth his whatever, he's on that. It doesn't make it back to the floor. It doesn't engulf and go full tilt. And engulf. Nope. If you sold every rally on the 4-hour chart, in other words, the range of the bar is telling you how tight stop to run. I'm not risking 2% on my account. I see a baby move. I got a baby order. Stops here, targets here. Every time it comes up, stops here, targets here. No rallies here. Here, non-directional trading, like, in other words, maybe you have sell stops here and buy stops here, but you're selling at the market into it, and every time it goes up, if it went up 12 pips, you've got a 12 pip trade plan. Okay, you got a 14 pip trade plan, a 16. See, what I'm doing is trading a bunch of tickets and softening the equity punishment, right? If they slam it down and they stop me out, or what if I have a hedge built here and I'm starting to make a little money on the south side, but I'm like, I don't know. Now I start putting in limits here. And here's another sell signal. The only rally this is the only chance to sell and claim your counter and claim that you're going against no nonsense goober. He only goes short here. You're going to go short here against him. Short, short, short. Well, actually, there's only two sells here. See, I don't know why the no-nonsense Forex guy can't see what's going on here. This is a real complicated little story. So here I'm going to zoom in. Let me see if I can just really illustrate this thing. Okay, so drawing mode. Ignore that line. Here is where we have our limits sitting for the whole week or whatever. And when it gets down here, we buy more, right? So we bought a little bit, now we really load in. And then we scalp out, maybe we dump here, and maybe we do sell here. This is our first sell. In other words, 3 marching soldiers down. First rally, we sell. I mean, you got to have a rule system you shouldn't need more than 4 bars to trade. Like I said, if I put a gun to your head and said, what's the trade now? See, this is afraid of being wrong about what's going to happen. Well, just assume you're going to be wrong. If you assume you're going to be wrong, you probably put on a hedge. So the one guy was saying, why would people hedge? Well, psychologically, and for the fact that you're going to pay more, but it's not as detrimental. It's like if you only date hookers, right? Like, so every now and again you throw like some normal girl in there. The bank manager. She works at the bank. She's bonded. So, It is hard because when I read the Steve Neeson books, all three of them, there was not one fucking trade plan. It didn't say, well, when you see three marching soldiers, the next rally, sell at the market, and then start running a trailing sell stop. You could also start running a trailing sell stop. You could be a passive trend trader. I run trailing sell stops, and you're getting filled every fucking 4 hours. Don't forget, right? You're pyramiding into this thing. There's so many techniques of getting in the market. Or are you selling every rally? If you sold at the market here, sold at the market here, what this guy's missing, the no-nonsense Forex guy, it's about tactics and technique. It's got nothing to do with figuring out which direction the market's going. Because even if you know this was going up, what he's saying is that I'm waiting for some stupid fucking signal and I'm going to pull the trigger here. Or I'm going to pull the trigger here. As long as we don't go past 1% of our ATR on some harebrained... I mean, dude, you might as well just open the phone book at random and think that you're going to find a brain surgeon. Okay, it just doesn't make sense to invest that much money, and you're going to pay the brain surgeon heavily, I suppose. I think this is Sunday night here. This is like a gap or some stuff here, but look at how choppy. I mean, nothing is that when you see this, say you bought this plunge here on limits, and you start seeing doji, you're like, yeah, this is probably going to get a little rough here. But what really matters is what is the true range of the last 3 bars, like, or if you want to look at the big picture, you're looking at this top all the way down to here. What is that range? Now, if you're trying to make those many pips, I get it. You're going to want to get in here in anticipation that this is a 50% or some 618 bullshit. But look how fast it gets there. And when it gets there that quick, like there are people bailing here going, nice trade, I'm out. Because it immediately comes up, and would you sell here is the question. Okay, if you don't feel, it's all about feelings. If you don't like that trade and you want to be a confirmation goober, you're going to put a sell stop here and look at you made money. Supposedly, but if you ran a trailing stop to here, you can see how it just, you're going to get chopped to death. If you put a sell stop here and you run protection here, okay, they stop you out. You made this much money, right? But your risk really was this, because typically, if you do put a sell stop here, you put a buy stop here, right? So if you're going to trade that style, sell stop, sell stop, as soon as you get filled, trailing buy stop, more sell stops. And here you're a trend trader. Look up turtle trading. I don't know, maybe I'm just blowing through too much stuff, but turtle traders, all they do is sell new, opposite of what I'm doing, in the right context of time frame. They're selling new lows. They sell low, and they sell low and they sell lower. They just keep selling into this. The only time they get burned is when it retraces, right? Like they would buy high and sell higher, buy low and buy back lower. So they just, because if you pull the trigger, also they'd have to babysit it also and keep pressing a button that says sell, or they keep hand placing tickets here. But if that's the case, then it's easier just to say it's up, let's sell at the market, okay, with a stop that's appropriate to the last bar or the last 2 bars, because nothing else matters. This world's happening 4 hours at a time, right? This is an unfolding story into the abyss. Yeah, there are people that bought and they probably scalped to here, because look at the tail on that. See, and you look at this entry here. Kind of hard to see, but this thing stop hunted some guy that was short here that got too conservative and ran too tight a stop. But see, somebody that's got deeper pockets put a sell stop there, a buy stop there, and they just walked the fuck away. They didn't give a shit. And they made money. So you just care too much is what I'm saying. This guy, no nonsense Forex guy, is probably a nice person. I'm not saying he's a serial killer. Well, only logic, but seriously, man, I mean, being a good person and all that, just, he's trying to be like this polite trader that wants to get stop hunted and be one of the, you can't do anything about the banks, this is the defeatist view of reality. Like, there's nothing you can do about it, Well, there's nothing we can do. Woe is me. Glum from Gulliver's Travels, woe is me. No, there's something you can do about it. There's plenty of stuff you can do about it. Build a trade plan that says I'll risk 25 pips at the market. Boom. I'll put an order in here. Boom. And that's what trading is. Very boring. Very just kind of utilitarian. Just there's nothing you can do about this stuff. If the market's going to drip down like this, you could either get on the short train at the market. Like hopefully people can perceive this giant hole here, and look at this hole that never filled. So this was the hope for the bulls. We were going to break out of this range and go this way in the simplest terms, and people would be willing to sell up here, no problem. Even level 2 people would probably see a sell up here. It's how big are you selling? Is this a scalp back to here to the structure breakout? Is that your trade? Or are you going to and then are you going to go long? And so what people try to do is extrapolate this big narrative out into space, but they never account for, in other words, a lot of people could make this assumption. We'll come here, we'll bounce, but explain this story to me here of this clusterfuck of nonsense. And finally, after wicking down and like fake breaking out, and it finally kind of collapses, but nothing really too satisfying, just to hear this 8-hour basement's tagged, and then we get a little dead cat bounce. And it goes doji. Here comes the, the hedge traders. Perfect fill for them. And the non-directional traders cleaned up. They got filled in their sell. But are they making any money if they come in with their goober protections and protect that trade? They're doing okay, but are they killing it? No, they're killing it here. They're killing it here and killing it here. But are you waiting for this dumb shit indicator down here to take away all the detail that you see right here? You're just ruining it. You're ruining your charts with these indicators, except for RSI. RSI is closing prices in an index of 0 to 100. It is the only gauge of momentum I can even think of. Everything else is just a fucking overly smooth. RSI is blow by blow. There is no smoothing. It's how many periods we stack up. Because you can see when the market goes up, RSI goes up. When the market goes down, RSI goes down. It's literally lockstep. So the fact that this guy can't use RSI is mind-blowing. It's just, like I said, difference. Not everybody sees the world the same way. And maybe he's making more money because he's just getting in and he's not over trading maybe. So it might be costing me, but see, that's why I'm trading the euro. Because I can trade more complicated. Whereas, yeah, if he's trying to make 1,000 pips and he's on the daily, and he puts a 300 pip stop on that trade, yeah, I'm out of that. I'm not putting a 300 pip stop on everything I do. I might try to make 300 pips in a week, but I have to dump it and reload when you go into Asia because if the spread's going to come after you there, and if you just made a bunch of money, you just go, oh, I get right back. In other words, if you just rode it north and you dump the whole thing, now you can just pepper limits beneath you like a pig. It doesn't matter then. You're like, oh yeah, I'm up. This is just playtime now. I can just kind of like let the market come to me. I don't have to fucking chase it anymore. Besides, you sold because you think it's going down. You got out of your longs because you think it's going to back up. But do you want the stress of going short now and having to babysit that fucking shit? If it's going to go doji out, right? If it goes smashing down and you're up on the trade and you were short, the best thing to do is go flat, free up your margin, and just come back in because the drama's over. On this chart, I think I went through it here as it came unwrapped. I pointed out this candle and this candle. What are the most dramatic candles on this whole fucking chart? I guess these are the other two here. And this is another classic trap above here. Doji's out. Those guys come in. But it doesn't mean, like this guy's saying, they rode it all the way down to here because look at how vicious this comes flying back, right? So every 4 hours is a whole different world. Every 4 hours is unique. Sure, we were all hoping it was going to... If I bought this plunge, I guarantee you that I'm looking at this going, oh boy, if they ever fill that and they didn't make it very far, they didn't even make it back to here. So that's another problem with this currency pair, it's such a thin. I just don't trade it. So, but it doesn't mean that the data is not kind of valid. But this looks brutal to me. Like, look at this chop on the 4 hour. Like, yeah, okay, well, I made like 5 pips. Look at you made 5 pips. You have to trade pretty hard on this, and then the spread's going to hunt you down. I don't know. To me, it's a thin market. But it doesn't mean that if these were daily bars, it's a whole different story. Because if these were daily wicks, I would load up so hard on the tips of these wicks, because those wicks, you wouldn't even see the spread. And I'd ride it to the other side. I'd range trade the shit out of that. Now, that's another consideration. How are you trading this shit? Do you have buy limits here and sell limits there? Are you range trading this and just going, oh, I don't give a fuck? Are you trap trading it? Are you trapping retail goobers? Oh, you got a sell stop here, do you? I'll take that. Oh, let me guess, you got a buy stop here. You traded that breakout. Oh, poor thing. Oh, oh, you try to get in like on confirmation here. Oh, look, it's going to go up. I'll sell that. Are you that guy? Or are you? You know what? I don't know. I'll put a sell stop here and a buy stop here. We'll just see what's going to happen. Look, I don't want to get involved unless it takes this out. But what are you doing in the meantime? Is this the only currency pair you're trading? You're watching this thing go like this? Going, what the fuck? Well, it's okay. Don't bother me. It only took 3 days to get filled on this breakdown? Or are you going to... Another thing. His chart is so fucking compressed from top to bottom that I can't even talk about this area, because if the spread is tight here, this is a whole thing going on. And even if you only bought that and dumped it, you're still selling, right? You buy and dump, buy and dump. Like I said, I typically trade for the long side because it doesn't matter. I'm getting out where the sellers are coming in. I could put sell stops in here and get in here like this. But when this thing crushes down, I'm buying at the market. And maybe I have buy stops here. Not really, but in my mind, what I've decided to do is I'm just going to front run it with limits and buy at the market every time it's down and anger trade it at the market. So I have an anger. Like if this is down here, I'm buying. I'm buying, I'm buying, I'm buying. I'm long on 3 positions based on the fact that it went down. I'm going to accumulate. And then I'm getting filled on limits, hopefully all the way down. And I'm putting in more limits here and tighter here, tighter, tighter. And here I'm like, oh God, I just bought that. Now I do not buy anymore. Maybe this doji. That's it. I ain't buying it. I'm waiting for this thing to fill. And I'm watching my equity go up. And then maybe I would sell it, but I'm not expecting this. Anybody that's thinking this has to be out of their fucking mind, although it is possible. I've seen it, but you just have to say, okay, we went smashing down. We've come up. I guess you could do the channel. Okay, we're here. Now we're going to go here. And I've seen people do this, a Hana Forex trade, straight down. Boom. Okay, it could happen. Not saying it couldn't, but maybe you had some limits here that you got in because you could see this little void it left behind, this 8-hour rooftop that they tag and bag. That's what's making the market go up and down, is the voids it left behind. That's what's the cause for the effect. Why does it go up after it comes down here and stops people out? And just think of the stop hunt is, yeah, you're trading against goobers. You really are. Just do the opposite. It hurts to do it because you don't have confirmation. It feels awkward, but typically this is how we make money. Going against the grain, going against the herd. Okay, let me see how bad I don't know if I even made worse sense just now because I didn't actually listen to what I did. It's my first time. To put a buy stop and a sell stop with nice fucking insane ratios and roll. Okay, fucking insane ratios. What I mean by that is, and I don't know how far this is moving, but if we put a buy stop here and we've got kind of a bad ratio, but we've got enough where we're going to take it to here with a stop here, right? So we're gonna have a bracket, buy stops, sell stops, and insane ratio I'd say is about this. But on the way there, it's getting out, right? So there's a script for that. You press a button and maybe it puts in 3 buy stops. First one's a scalp, second one's intermediate, and then we have the insane ratio. That's what I would say. Load it to here without putting in a trailing protection. Okay, so no trailing stop. So if you do a burst trade like this, where you put in the buy stops and the sell stops, and you don't trail for safety because you already got sell limits up here. Like, you got to think ahead. Would you sell up here? Probably. Would you buy beneath here? Probably. So on the way there, there's a trade. What if you sold up here and you could still bracket this doji too and add to your, so you have a trade plan for each 4-hour bar on this chart. Now, every 1-hour bar, yeah, you're probably, unless you're in the euro dollar or something, you probably get whipsawed and chopped to death, and maybe you don't want to trade that frequently, or maybe you on MT5, you could run like a 6-hour chart. You probably get some kind of indicator that it'll let you do a 2-hour chart or whatever. But in the end, the 4-hour chart is classic because most brokers, it's 5 p.m. closing. So your candlesticks there, you got 5 a.m., you got 9, you got 1 p.m. And you can put a trade on at 1 p.m. with a tight stop any day of the week. 1 a.m. When London opens, Europe opens, there's probably going to be a big candle, a big move, and maybe not. But so you're constantly adjusting your trade plan for what are we running today. Now, this is about adapting to the market's behavior by pip. And the reason why it's difficult to trade the pound and the euro, because if you trade the pound, you're going to need a whole different, it's like if you have a guitar. It's a long scale guitar. It's like a few inches longer. You need different strings, different tension. You can't just throw that. You can't put 7 strings on some narrow neck, right? So you're stuck with what you could possibly squeeze out of something. So the market's constantly changing, though. See, the market's constantly changing its dynamics. So at least if you have 3 levels of dynamics, like you could trade with a 15 pip stop, a 50, and 100. You can trade on stops, limits, and market orders. You can sit there and look at the tick chart and say, I guess I could scalp this. I'm already in, though. I think I'll watch it retrace. If it doesn't retrace, okay, I could either take what I'm up on now. So the market's really quiet. Now here's another problem is you're not letting your profits run at that point. So it's the psychological switch in your head. It's not about what this guy's saying, this dumb shit like, well, here's another rule. If you see it go, and the way the guy talks, you could just blow your brains out. It sounds like Al Gore or some shit telling you about the climate change. Well, if you see it, and he's like, if it goes here, then you definitely do not re-enter unless you get another signal. Holy shit, really? Who lives their life like that? Well, I'm here at the stop sign, and I'm just going to wait till everybody comes to a stop. I'm not going to go. Oh, argument this morning with this people on the phone. Oh, my God. This lady's doing this. I'm waiting for you to stop talking so I can talk. And I'm like, okay, you can go now. And then I swear to God, it's like 10 seconds. She goes, are you done talking? I go, okay, it's your turn. And I swear to God, we're talking about 5-10 seconds. And I just want to reach to the phone and punch this lady. Why are you getting so upset, sir? I'm impatient. So that's why I decided I want to trade at the market because I'm impatient, but I can't trade 40 standard lots at the market like Hilton and sit there and go, oh, I'm down like $700 out of the gate on the spread. I think hopefully I can make this up in the next 3 minutes. Okay, it's just not. It's not even his account he's trading. Don't forget when he does these trades, he's got like some $50,000 account or $250,000 account. And he could trade it up heavy like that because you know what? You can take a few hits like that. It's no big deal. You're down $5,000, but I'm not trading and I doubt this guy, who is the no-nonsense guy, would ever trade without a stop the way Hilton trades, which is just like, I think we're going up. Let's get in, boom. And, So, it's a different style, and I guess, a lot of people do like this indicator world because they like this idea that the dashboard has. I bought this thing called the dashboard, Forex dashboard. And I thought, well, that's secure, We'll just look at see out the front window of the car, make sure everything, we haven't run anybody over. Is there gas in the car? Yes, there's gas in the car. Is there this? Is there that? What do we got? How do things look? And so if people feel comfort in that, okay, bless your heart. But I'm just saying, if you want to trade as the market's unfolding, as it presents itself in the ugly, noisy manner that it really is at times. Right. I mean, how many times does the market really just really move hard and people are like, holy shit. Now, I see 4-hour things on here where I see it just go 4 hours, sheared off candles. Now, you got to ask yourself, when you see a sheared candle like this one, where, I mean, it did close down, but they take out the low of this, and there's stops in here, right? This is the flag also. This is your triangle. This is your only rally. Why does this move so hard down? Right? Because it's just going into outer space, and it literally, at the end of 4 hours, bounces. Takes a breath. It's very binary. Then down again. I think this is Oanda. I can't remember what broker this guy's using. This is probably 5 p.m. It wouldn't matter, but on this chart, these are amazing moves. Like, this is almost, once you break out the head of that hammer, and these are dojis, even though it's a hammer, because a tight trade plan here is going to reap all that money. And when it starts cleaning this house here, this is why this is such a harsh move. And when it's done, it leaves the station. It goes after this goober stop. It thinks it's going here. Yeah, somebody got stopped out of that. Or some goober like this clown bought here, or because he had confirmation. I haven't even got to myself being incomprehensible here. But now that I look at this chart, once again, and just look at this amazing, look at the stop hunt before it just goes. Now, we've all seen that on what that looks like on the half-hour chart, like this. Bam, bam. You ever seen this move in Forex? Gee, they're like manipulating the markets. It's crazy. Yeah, that's what happened inside here on the smaller time frames, right? Closes up, then bam, bam. The pin bar is the assault weapon of choice. And, of course, up, down. Then just people are like, what the hell? Do you know how many people are, the bears are hoping it goes this way? And it does, but look how they just stop punt the poor guy that just, well, I finally got into a good trade, and I moved my stop to break even, and it came after. Yeah, really? I can't believe it happened to you again. I mean, you got to ask yourself, in the next 4 hours, if you don't take something off the table here, I don't care what you're doing. You're fucked. Like, if you bought here and you didn't take something there, right? You bought here. Even here, when you bought, you got to get out of something before it makes it. It may not even make it to here. In fact, it doesn't until later, way later. But boy, when they do get there, huh? First, we had to go stop hunt these guys. I mean, once you see you have to get in against the no-nonsense. You have to trade against him. You will make more money if you trade against. So that is the secret. I think he's going to finally reveal. I think that is the clincher. He's going to just be like, yep. Because he claims indicators suck, I saw the TDI, but I haven't got to. I'm saving the worst indicator of the world, RSI. I don't know if I ever watched that. But I'm very up on RSI. It's the best when it comes to the trend in closing prices. Or did you sell into that and buy this little mini vac here? So there's so much shit going on. bar. There's so much shit going on bar by bar. So I hope this is comprehensible. Maybe it's even more incomprehensible what I'm saying. Bar by bar, it's a whole fucking litany, right? When I say a litany, I mean if you're gonna live the 4-hour lifestyle like that, and you're like, oh man, there's stop hunt here, should I get in here? Yeah, it was a bit bad. That's a whole world, right? And you're trading heavy enough where you're making money, and you're just going, what's next? What's next? Because you don't really know how long it's going to take before this thing caves in. Like, we know. Okay, I'm sure that if you had some moving average crossover system, it crossed over here, and you're like, dude, let's just try to get into a sell here, but I think we're going to take this out. Let's try to ride into that. Okay, well, it takes so long, and this is like, wow, that's all we're going to get out of that? It doesn't really start to heat up until here, and then it's just like, wow. And this is the only dead cat bounce before complete capitulation, and it starts cleaning house, and we don't know what's to the left here. This could be going to a 3-year low. We don't even know. And we're either selling into that for the ride down for one last plunge, but when it gets all drifty here, like once these big down moves in, you got to adjust your trade plan to the pips that we live in. So you're constantly, it's like having a girlfriend, okay? She's she's a size 105, and now she's a size 00. Then she's a 34, and you're like, wow, this is very expensive, right? And it's very difficult to get her wardrobe together. Not to mention, every 4 hours she's changing her clothes. It's like, what kind of relationship is this? Of course, it's dysfunctional, and it's very difficult to go out anywhere. People are like, are you a chubby chaser? What's going on? And the other girl was like, is this the same girl? Like, is this the same currency pair? Is this what I thought I was signing up for? Australian dollar? Now, this is the 4-hour chart. Granted, if we put the weeklies up, you'd see, okay, well, we have a doji on the weekly, and I trade with a 200 pip stop, and what I'm going to do is I'm going to get in here and just ride this fucker into a giant vacuum. I see the vacuum. I'm going to get in on the dojis on the weekly, and I'm like, here we go, people. This is going to be a fucking trade. And I would much rather do that trade. Forget indicators, because on the weeklies, you're really going to wait for divergence on MACD on the weekly? Are you out of your mind? On the weekly candlesticks, and I should do a candlestick classic white screen black candlesticks and just talk about how you would trade the weekly, because you could scan and you could print out, because you could just print these out and look at them every morning on paper. Because these computer screens just drive me crazy. I just bought a new fucking so-called this Android phone. What a piece of shit. My God, man. I got to swipe everywhere in here. No wonder they sell screen protectors. I'm swiping the screen, which is so inappropriate. I never swipe my screen in front of my big computer. But yeah, I'm swiping this thing, and I can't find shit on it. It's bullshit. Latest version. So back to my rant here. Let me see if I can continue here. I'll try to explain myself. Oh, this is support, right? If this was a line chart, this bottom would become a top, and it wicks up in the last minute. That's right. I just noticed that. So if we had a line chart, we would see that we break out, we pull back. The confirmation traders come in at the rally into the floor. Right, because if it doesn't engulf, it's going to hell, and there's plenty of abyss below to fill. Here comes the fucking breakout goobers. The breakout goobers are winning. You nailed it. Who is this guy? Goobers here cleaned up too. Dude, that's my Bronx accent. Simple trade plans like, well, it's going sideways for a long time. God, I was pissed off. What could possibly go wrong? Possibly happen if it tags this area and doesn't take out this area. What could? I hope this is not incomprehensible. I guess. How far past 16 minutes is incomprehensible? Okay, it's a minute in. Well, that's a lot. It's incomprehensible all the way to the end. Possibly happen. Can you walk that fucking forward? Yes. Your sell limits here did not get filled, granted. But okay, so I'm talking about trades that you placed that you didn't take any risk on there. But these filled here, right? If you're running if you're trying to gobble up these on limits, because we might come back up here, and maybe you're long on limits entry here, it doesn't mean you can't trade the market. It doesn't mean you can't get in here because of these. And even here, if you had the insane ratios, so you have to scalp out whatever this body is. You need a trade that can take 10, 20% off the table. Maybe you let the rest go. And here there's no fill. Maybe you got stopped out on your other target was here. So if you had a completely symmetrical target based on a doji, we're either going up or going down. All you know is the market hasn't done shit. Every time you wouldn't take this trade. So this one candle, if you only trade dojis, right? There's 1, 2, 3, and I would trade bigger on the hyper dojis. So I mean, like a dragonfly gravestone. What are the other ones they call it? Morning cross. I don't know. It's all coming back to me in some nightmarish way. Because I thought, there's got to be and then nowhere in the book is there any explanation of a tactic to get into the market. So I just had to figure it out for myself that if it's a small bar, and I know this sounds really crude and simple, but that's the sad thing about it too, is that trading is so stupid that if I saw a small, this is 8 hours of nothing, if I just took a non-directional confirmation upon entry and put a sell stop there and buy stop there, or I could put on a hedge at the market, and that could be my stop for my buy, and this could be my sell stop, and they stop me out of my buy. So I either built a monster hedge here that I'm going to scale out of, because the only time I'm going to accumulate, I'm going to jump over here now. If I bought this on limits, I would accumulate and try to do a hard dump into the floor here. But if I don't get it, I still have to have some of these tickets getting out, right? It's a buy low, sell high, but I never got my target. So when the market does go sideways here, or we have this gravestone here, regardless to the wick, right, I have to get in a hedge here because I can't put a buy stop and a sell stop. Another way to look at it is this. Forget the doji. Put up a pure bar chart and look for small bars to put a buy stop and a sell stop. Now, that's a completely different mentality. If I wait for small bars and I start stacking up sell stops, buy stops, now I did get trapped a little long here, but here I clean up. I place buy stops and sell stops here. I'm like, holy shit. Now, are my targets really gauged for this move? Some of it should be, because if you only try to make this, you'll never make. In other words, if you keep getting filled and kind of stop hunted on both wicks, they trap you. I discussed this in videos before, and people go, if you do that, yeah, no shit. If you do that all the time, you are going to get whipsawed. If you just put buy stops and sell stops. So one way to filter out the criteria, here you look like a genius. Buy stop, sell stop, kind of filled on the south side. But if you're running trailing buy limits on the 4 hour, you're getting picked up here. If you have buy stops here because you have a narrow range and you buy at the market every time it's down, here's your only buy at the market. I mean, these are simple rules. I only buy if it's down. I only sell if it's up. So we can back test it, but the problem with back testing is it assumes 2% of the account or some dumb shit stuff like this. No nonsense this guy's using. I would never assume that. I would always assume one thing for certain, that if this is an 8.5 pip area, that I can have a 12 pip stop, and I can have a 12 pip take profit, and I can have a 14 pip stop, and I can have a 20, and I can have that, and I can press a button, and every 4 hours I can keep either placing them, waiting to get filled, and maybe I will get trapped. But layered on top of that, I need to have the other thing, right? I can't just live from one tactic. So if I am really dedicated to trading this thing, I'm not waiting for some harebrained, because really here, you kind of get a pullback, right? You get a pullback, here's your confirmation entry. But would you really think that they were going to, and maybe you had buy limits here that never filled, right? So it's pretty tough to trade this currency pair, by the way, because of the spread factor on this thing. And I don't know what it is. I know if it was some brokers, they're just going to annihilate you. I haven't stared at it, but I know going into the end of the session, which is only 6 bars in, that, you kind of tactically have to think about, well, they're going to raid this area, so do I buy heavy here? Let's imagine this is a 100 pip move or a 50 pip move. Okay, so you're going to trade with a 14 pip stop to try to make your 50 pips or something. But you can see how much work this is in this area. What are you doing in this area? And is his goober bot keeping you away from this trade? It's just, oh my God. You seriously have to do the dollar risk, I think, is the only way to trade is from a dollar risk standpoint. So let me continue with this guy. You had to be willing to sell this fact. Who is this whiny bitch? You don't know when that's going to stop. And all of a sudden all of a sudden in 4 hours, bam. But don't forget, your market order sold at the market. Every time it went up, you sold at the market because you got a trade plan for that. You bought at the market. Okay, I get the fact that it went down here, but if you bought at the market here, bought at the market here, because it's down big, you're trading it. You're not buying these little drips down at the market because you're getting filled on limits. And if you are buying these little drip down, you have tight stops. So you're out of those trades. So if you are buying those little drips, yes, you're going to, and that's just how it's going to be. So, or you're going to put hedges on. You're going to put hedges on there. So you just got to figure out how are you going to approach it? Like, do you like getting in on confirmation? Well, if that's the case, then just put a buy stop. Just bracket the thing. Don't wait for some big up move and the ATR to go. Those are just ridiculous thoughts for me. I've had those thoughts, like the guy that's been trading 30 years. Yeah, I mean, you could think like that, and then you could back test it, and you can go, look at this setup here. But trust me, when the divergence happens on your screen, and we can play a live playback RSI, show you how it works on the fly. But there's no way that it's going to prevent you from getting stop hunted if you don't understand where the stops are that are being hunted, I guess. I don't really know how to explain it. Some fucking psycho case, and it never makes it back to here. So you would have lost on that if you only traded that from the long side. But here's your fucking dojis, okay? Right, so there's trade plans. Sure, they're plunging down in, and if you said, well, you know what? I guess instead of getting out of the trade, you start to sell a little bit. What is wrong with being 30% long? I don't know. I don't know why there should be something wrong with that. So that's how I look at it. Like, you're just never going to pick, and it's never going to turn around the moment you buy it and just go to the moon. It's not going up 1,000 pips from the moment you pull the trigger. I just don't think that trade's possible. How are you going to know if this moment is the moment to do it? The market's treading water. It's very noisy on the 4-hour chart. It's ranging on the 4-hour chart. How is it not ranging? It's never locked solid. Is it like solid? I just don't believe it. So that's the other thing to consider, What are the chances? What's the probability that the market just treads water? So this is why people trade the S&P 500 and stuff. There's liquidity there. There's a lot of people trading that. It's a real obvious market. Yeah, you can go into these bizarre pairs, the guppy and all that stuff, and swing trade it. But yeah, you're going to be in some 3-week trade. That's going to be. Maybe you just don't want to wait that long to get paid. Maybe you want to get paid every week, every day. For your effort. So Anyways, I hope that explains it. You scalp to that, then you get gravestone right here. Holy shit. Gravestone to gravestone. You're out. So gravestone to gravestone, it would be hedge to hedge, heartache to heartache. So I don't know if that helps, but anyways, my attempt to explain myself.